Hi everyone, today we will be overviewing car wash financial model. So first of all we need to create some rule saying that all inputs should be highlighted with specific colors. In this particular case we will be highlighting them with this blue color, because once your model will be done you will be interacting with third parties, bankers, your business partners, and they will have to be able to find all the inputs easily for scenario building, for stress testing, and for yourself. So once your model is ready you will be building lots of scenarios, how the project will behave in this scenario, that scenario, so you will have to be able to find all the inputs easily. So that's why we're creating the rule saying that all the inputs are colored with one specific color. So we're not touching any other cells with any other color. So first of all we are specifying what is the year of first financial inflows or outflows of this project. Usually it is the beginning of the investment stage. So this is the input number one. Then we are specifying the month and year when we get the first revenues, month and year. Then we're moving to the core of our project. So first of all we need to specify what type of washes are we going to perform. So we can specify here different types of car wash that we're going to perform. Then we need to introduce some time parameter that will serve as a time limitation factor for the future sales plan. So here we're introducing time category. We need to specify how much time does it take for each wash to happen. So for example in this case we're saying that this car wash will take 15 minutes to perform, 17 minutes, 40 minutes, so it doesn't matter, so all numbers are imaginary. But once you have this business idea in mind you need to introduce a time parameter that will make your revenues algorithm more credible, because once you will be specifying unrealistic number of car wash services, your financial model will be telling you that you are wrong, you need to decrease the amount of services. So this is very important, so you will be living in the world of realistic numbers. So in this interface we are specifying the duration of the car wash services. Then we're specifying the price for one service. Then we have a column where we can switch on and off different types of services and see how the cash flow will be looking if we calculate or exclude from calculation this or that type of services. So for example if we're too optimistic with this car wash service or that car wash service, we will be able to quickly switch it off and see what will be the payback period in this particular scenario. So this column gives you a huge flexibility during scenario play, many steps ahead when financial model is ready. Then we also have the pricing coefficient for all the prices, so we can quickly increase or decrease the whole pricing or specific pricing for specific service. We will be able to do it without adjusting the prices itself. So this is usually valuable when financial model is ready and you want to see what will happen if we increase the prices, let's say on 20%. You just type here 120 and all your pricing increased by 20%. So this simplifies scenario building. So usually you have to think you have to be proactive and think about how your financial model will be flexible for stress tests and scenario building when you're done with it, because once you finish with the modeling itself you will start playing with your model. So you will be playing with all these coefficients, you will be playing with all these on-off toggles, so you will be playing with the inputs a lot. So you need to make all the interface very comfortable for you, for your third parties, business partners, whoever. Then we need to create the list of components that are involved in the car wash services, so the liquid detergents and so on. So here we have the list of all components that we may have that may participate in different car wash services. Here we can specify the cost per 1 unit of each component of in its matrix. Then we are moving to consumption of these components. So here from top to the bottom we have the list of components, liquid detergents and so on, from top to the bottom, and from left to the right we have different types of car wash services that we perform. This is this list from left to the right, and here in natural matrix of these components we're specifying the consumption of this component for each type of car wash that we do. So here we are describing direct cost per each car wash type that we make. So here we are describing the direct costs. Now we're moving to the next block of inputs. We are describing the working hours. So in this table from left to the right we have typical year. From top to the bottom we have the days of the typical week from Monday to Sunday plus holiday. And in this area we are specifying how many working hours per day we have in each month and in each typical week. So we may have some seasonality in this business, so here we can specify the seasonality in working hours per day. Then we're moving to the next block of inputs. We need to specify the amount of services per day inside the typical week for each month. So we may have some seasonality in our car wash. So for example in winter we may have less services. That's why we need to build some seasonality blocks of inputs where we will be specifying how many car wash services we will perform. So here we have the month. From top to the bottom we have different types of car wash services. Here we have the typical week plus holiday, and in this area we're specifying how many different services we perform every day. So if for example I would like to specify to set up more services than we can perform, so we will be given here the alert. So this conditional formatting is analyzing what the consumption of the time needed for these services performance, and if these if the total amount of hours exceeds the total amount of working hours, then we will be given here the alert. So what it does, what it gives us, it gives us the credible revenue generating algorithm that will give us the accurate revenues, the accurate payback period, and so on. So this is very important. So the timing that we were specifying here, the duration for the services, car washing services that we were doing at the beginning, all this timing reflects this conditional formatting line, saying that if the total amount of services exceeds the working hours, we will be given the error, the red. So it's very important for scenario modeling, so it won't give you the ability to specify more services than that you can perform, and this means that you will be given the realistic revenue. So you're doing this exercise for the January, February. So we are doing this exercise for the whole typical year. So inside every month you have the typical week plus holiday, where you are specifying how many car wash services you are performing per one spot. So once you are done with that, so you are doing that for all 12 months, then we need to specify, then we're moving to the typical year. So here we have, from left to the right, we have the months. From top to the bottom we have days of the typical week plus holiday, and in this area we're specifying how many Mondays, Tuesdays, Wednesdays, Thursdays and Fridays and so on will be in each month plus holiday. So the total should be 365. If we have more or less, we will begin here the alert, the red. And then we are moving to the next block of inputs. Here we can specify how many car wash posts we have. So by posts I mean this, so 1 post, 2, 3, 4. So how many posts per car wash are we going to have? So here we're describing the scale of your business. So here we specify how many posts do you have, and then we have two types of investment plan. The first investment plan we need to specify for 1 post. So here in this green column it's showing us when we start getting the first revenues. So May 2020, if we go up, so we have May 2020. Let's go back. So here we have May 2020, and then backwards we have the investment plan for 1 post. So later we will be multiplying this investment plan on the amount of posts that we have. So for 1 post we're specifying what we are investing in, how much we are investing in, and when we are investing in, before our car wash business starts getting the first revenues. Then we're moving further. So the next block of inputs is dealing with the speed with which we are reaching the target revenue. So we're assuming that we won't be able to reach the target revenues right from the first month of operating activity. So here we have May 2020, like here, May 2020, and we're specifying the speed with which we are reaching the target revenues, where we're assuming that we're not reaching the target revenues right from the first month. So for example, we are having just 10% of target revenues when we opened our business, then 20% of target revenues, 30, 40, so we may specify this percentage as we wish. So here we can specify the first 4 years monthly and then extrapolate this number further. So usually when financial model is ready and many steps ahead, the entrepreneur wants to play with this parameter very often. So they're playing with these percentages, because these percentages are showing them the amount of operating losses that occur inside the cash flow statement. So this percentage significantly affects the operating losses. So once we are reaching the target revenues, our project produces operating losses, and these losses should be added with the investment plan investment stage expenses. These two components, these operating losses and investment plan expenses, they are in total, they are formulating the total amount of money that you need to start the business. So usually, depending on these percentages, the amount of operating losses differs significantly. This may create pessimistic scenario, optimistic scenario, So you will be playing with these percentages a lot, because you will be able to see different numbers for financing needed for your business idea depending on these percentages. Because the first investment stage expenses, you know all these expenses pretty clear, but operating losses is always a mystery, and the entrepreneurs see them for the first time when they start playing with these percentages. Then we have the investment plan. So this investment plan we have for one car wash post, and then this investment plan is being multiplied on the amount of posts. Then we may have some investment plan that doesn't matter how many posts we have. So there may be some investment plan expenses that occur anyway, no matter how many posts we're going to launch. And this investment plan is for these types of costs. This is what we are investing in, how much we are investing in, and this is the moment when we start the operating activity. So logic is the same. Then we may also have the payroll. This payroll is for the let's say management company or something like that. So we may have some seasonality for this payroll. This is the amount of positions. This is the salary per person on each position, and this is the amount of people on each position. So here we can see that we have some possibility to play with the amount with the head count for different positions inside the management company. Then we have the fixed costs. These are the articles for the fixed cost. These are the values for the fixed cost. We have the typical year, and here in this area we can specify the fixed cost expenses depending on seasonality, if we have any, because despite of them being so cold, you may also have some seasonality even inside fixed cost items. Then we have a separate table for the depreciation. So these are the investment plan expenses. We can specify whether there is or there is no depreciation status for this expense. We can specify the depreciation level in months, the depreciation term in months. And then before we go to we start describing the taxes and the cash flow, we also have some tabs, green tabs for the fixed costs. So here in this tab, in each of these tab, so we may have some seasonality in fixed costs and payroll for one post. So we have two types of fixed costs. One fixed cost for the management company, and one type, and the second fixed cost is for the post itself. So here in these tabs we have fixed costs for one post. Here it is mentioned. So once we specify how many posts we have in our car wash, so these expenses are linked to this number. So we can specify how many posts we have, and then these expenses will be linked, the payroll and fixed costs, they will be linked to this amount of posts that we can specify in the first blue tab with model. Then we're moving to the cash flow statement. So we may have some, before we go to the cash flow statement, we have several types of costs: the value added tax, asset tax, salary, net profit, revenue tax. So depending on your Depending on your tax system, you may specify the rates for this cost. This is the tax base for each type of cost tax. And then we have the cash flow statement. So here you can see the detailed revenue structure, payroll structure, fixed cost, direct cost, taxes. You can see the operating losses. Then you can see the investment stage expenses, how much you need during the investment stage. Then you will be able to see how much of equity you need in this scenario to start the business. This is the loan. These are the interest payments and principal payments. And here in the last line of the cash flow statement, at the cash balance at the end of the period, you will be able to see when the project eats the equity and loan. So here it eats the loan and cash and equity. This is mathematical zero. It's starting from February 2021, for example, the project starts generating its own cash. So this is the moment when the project starts generating its own cash flow. And for example, if we need the total financing needed is $15 million, here it is. We can now go to the cash flow statement, and here we will be able to see when the project will generate its own cash that is equal to the amount of money that we need. And for example, now we know that in May 2021 we will get our money back. So this is how it works. This is what the cash flow statement tells us. Then we can specify the discount rate. Here it is. Then we are specifying then we can see the main financials. Simple, discounted payback period, profitability index, net income, net present value, total amount financing consisting of equity and loan, internal rate of return. Then we have the loans. We can specify up to 6 loans playing in our project. Here they are. So here we can specify the amount of loan, when we get this loan, year and month. Then we can specify the term of loan in months, interest rate, and if we have any grace period for interest payments or principal payments, we can specify it here. Then we have the tab with the charts with simple, discounted payback period, loan coverage ratio, and other main charts like revenues, total cost, profit, profitability, cash balance at the end of the period, operating profit and debt payment. Then we have the same chart done yearly. Then we have cash flow statement and P&L statement done yearly. And then we have sensitivity analysis tab. So once your financial model is ready, we will be able to test what will happen to the main financial numbers if the revenues increase or decrease with certain step, what will happen with the project if payroll increase or decrease, direct cost increase or decrease. So we can specify the steps. So for example, in this particular case it is 15%. For example, we can press this button and see what will happen to the financials. Then we can, for example, delete these numbers, set up 10% step, press sensitivity button again, and the sensitivity analysis will be recalculating the model. So you will be able to see how stable your current scenario is. So once your model is ready, the entrepreneurs always play with sensitivity analysis a lot. So they are testing how flexible, how stable this or that scenario is. So they are building lots of scenarios, testing them many times, so until they find the perfect scenario that will go into the reality. So they're doing sensitivity analysis for the revenue. The same story they're doing for the payroll. The same story they are doing for the fixed costs, for the direct costs, then investment plan, expenses, then interest rate, and the loan amount. So usually this sensitivity analysis gives the fresh portion of the information about the business idea. Usually the entrepreneurs start rethinking their business idea because they see that this current scenario is not so stable as they planned, so they are going back to the model, playing with the revenues inputs or cost inputs. They're switching on and off different types of services, going back to sensitivity analysis, push the button, see how stable this scenario, then go back. So and then they are doing that many times until they create the scenario that they are comfortable with. So that was the car wash financial model. I hope you enjoyed this overview. If you find these overviews valuable, please like, share and subscribe to our YouTube channel. Also, we are building some Power BI stuff in this channel, so please enjoy it as well. So thanks for watching, see you in next tutorials and overviews, and bye.